What's going on, everybody? My name is Zach Hartley and welcome back to another weekly watch list video. To start us off today, we're just going to do a quick trade recap. I've talked about Airbnb for the last couple of weeks. I purchased Airbnb last week and I sold it at the beginning of this week for a nice 15% profit. I was trading the options that expired February 17th, 2023 at $100. We made a nice little trade on this and it was actually a breakout trade. The stock was breaking out of previous resistance. If you want to see any of that, check out the previous videos. I also posted all of the information about this trade in my Discord chat. You can see it there, but this is what the chart looks like. That green arrow is my entry and the red arrow is the exit. Now, I didn't make too many trades this week because I was traveling, but we did have a very interesting week. The NASDAQ, for instance, was fairly choppy. We had a big red day and we had a big green day on Friday. The S&P 500 looks fairly similar. Big red day, big green day, trying to break out through those previous highs. And the Dow Jones looks like it actually got rejected for the third time here at this resistance level around 34,500. We did have a big green day on Friday, but overall it wasn't a great week for the Dow Jones. Now, there was a good week for Bitcoin. Bitcoin continues to rally, up by over 40% to start the year so far. That is absolutely amazing. We are also seeing a dramatic rise in the price of Ether or Ethereum, whatever you want to call it. Both of them are doing extremely well to start the year. So is gold. Gold is also doing extremely well, up from around 1,800 to start the year, up over 1,900 now. I currently hold options in a gold mining ETF that we are going to talk about real quickly. But the first thing I want to mention is earnings, because we have a big earnings week coming up with lots of big companies. On Monday, we've got Baker Hughes and Logitech. Then we've got Verizon and Microsoft on Tuesday, Boeing and Tesla on Wednesday. Lots of airlines on Thursday, including Intel and Visa. And then on Friday, we've got Chevron, American Express, a couple of healthcare companies, Colgate, Palmolive, lots of different stocks that are going to be reporting earnings this week. We are pretty much in the middle of earnings season right now. Now, when it comes to the market conditions, we got a couple of things coming up here. U.S. interest rates are going, the Federal Reserve is meeting to decide on U.S. overnight interest rates. That news is going to come out on February 1st, so not this week, but the week after that. We also have Ukraine and Russia. That war continues. China is continuing to open back up. Gold prices continue to move higher. And U.S. home sales, we just got data. They have declined for the 11th straight month in the United States. Not a good sign for real estate. Now, when it comes to market opportunities this week, this is the gold mining ETF. I currently hold options in this. We're doing extremely well. I think as gold prices continue to rise, the gold miners are going to do extremely well. I like the ETF because honestly, it's kind of tough to pick and choose a gold miner and compare them if you don't have in-depth knowledge of the industry. So I go with the ETF, and so far that has worked out very well. Also, in the world of Bitcoin, sort of the same philosophy. Hut 8 is a Bitcoin miner, and as the price of Bitcoin goes up, I think the miners are going to do disproportionately well. I currently have a position in Hive Bitcoin mining. I also like Hut 8. That is the stock chart that is on this screen right now. If we can break above this little resistance level right here, which I think is for sure going to happen on Monday based on the prices of Bitcoin that we are seeing over the weekend, I think Hut 8 and Hive are the two options. I currently have options in Hive. I am mining Bitcoin and I am holding Bitcoin. So I am kind of a long-term believer in it. Now, Tencent is another company if you want to take advantage of the Chinese reopening. Tencent, Alibaba, Didi, a couple of other companies, JD.com are all going to do extremely well in the reopening of China. Tencent so far has done extremely well, up by almost 100%, pretty much 100% so far. Alibaba also doing extremely well. I currently have a position in Alibaba and it is doing good. I was taking a loss on it for a little while, but we're back in the green. 3M is another company that I like. I'm thinking about adding them to my dividend portfolio. They currently have a 5% yield. They're paying out a 52% payout ratio, and I am watching for a breakout of this resistance line. It's a great company. The earnings are growing long term. It's excellently managed. They have very clear resistance levels, and so as soon as we can break through that resistance level and maintain that 4.5% to 5% dividend, I think this company is an absolutely excellent add to almost any portfolio. And lastly here is Wayfair. I pointed out Wayfair in one of the previous watch lists where I said, look, we have a key level of support right here that has now become resistance. And on Friday, the company announced some major new initiatives to reduce costs and lay off some workers and become a profitable company in early 2023. They also announced that they're seeing really good momentum, they're seeing good orders, and they're seeing good numbers coming through the system. So I'm very, very excited to see what the next quarter looks like for them. On that news and on that announcement, the volume absolutely skyrocketed. We saw a nice breakout of that resistance, and if things continue going into Monday, Tuesday, Wednesday for Wayfair and the stock continues to rally based on that news, I think this could be an excellent entry point for the stock. Now, if you're interested in learning a little bit more about how to analyze the charts, read the financials, and find companies like this, definitely consider checking out Skillshare. That is where you will find my completely free stock market fundamentals course. It is 10 hours long, and there are already over 14,000 students that have gone through the course. There's 400 reviews for you to read through. There's over 2 million minutes of watch time that have been spent on the course. It will walk you through step by step everything you need to know to get started in the stock market. And like I said, it is completely free. You get a 1-month free trial when you sign up for Skillshare. You can do the 10-hour course in one weekend, and I promise you it'll be well worth your time, and it'll be the best free resource that you can find online. Now, if you get any value out of this video, please remember to click that like and subscribe button. I sincerely appreciate it, and we'll see you in the next video. Good luck trading, good luck investing, and we'll talk to you soon.